Hello everyone. I think we can be starting. Uh, you can hear me, right?
Yeah,
Yes.
good morning.
Let me share my screen. And I would like today. I would like to start with a reminder. As you remember, our last class, which will be in a week, is supposed to be for presentations of students on different financial and economics phenomena. And I asked you to, maybe not so clearly, but I asked you to fill in this table, Google table, and you also can find this file in Canvas. It's called About the Course in Files, and here I propose um, you can actually you can choose any topic you want, but I just put some examples in here in this file, and you can take a look. And also, I want to warn you and ask you to group in a team of 2 or 3 people, because there are quite a lot of us, and I'm afraid that if there would be too much individual presenters, we just will not be in time. So I'm asking you to choose your team and fill in this form. If you don't have a link or you're not comfortable with finding it, please let me know. I'll send you another one. And please fill in this table. And let's say, for example, please do it until tomorrow. And if you don't, I'll probably just made teams randomly by myself. Uh, Not there shouldn't be exactly like 15 teams. Just you can prolong it here if it's not enough. Okay. Let's. Do you have any questions on this part? Okay. Let's then continue to our today's topic. Uh, on our one of our today's topics, I hope, because this one is really short. Uh, I called it everyday finance because this is just a set of different topics which we could face in everyday life. For example, okay, we'll see. And a little disclosure right away. Um, this part of the course, this is more like a set of useful things that we can face like on everyday basis. So it most of it does not require much special knowledge, so here we're quite on the same boat. But the aim of this class is just to group all those small things, life hacks, maybe warnings in one place, because sometimes it's easy to miss, uh, and so on. So I just try to accumulate some useful things here in the slides. So please share your experience, because there are a lot of stuff here, and if you feel like you heard something of what we discussed, or you used something, or your experience is different, please share. I think it would be useful for all of us. So, uh, financial lessons of the pandemic. Actually, I stole this idea of those points on this portal in the internet. Quite a good one, by the way. You can check it. Here is a link below. So, but they actually, for me at least, it looks very truthworthy, because it seems like those points, they quite reflect the real picture. So during the pandemic, you know that many people face the problem that they do not have savings, any savings to survive even couple of months if they suddenly lose their income. And this turned out to be a problem for many people. So now our society, I hope, is more aware of the necessity of making savings. So another point is that it would be good to have a financial plan. So when everything is so undefined, so you should probably start, uh, and you and everyone probably should have started planning a little bit ahead, especially when limited in finance. Uh, Many people also turned to online services, which is a good thing, I guess. But on the other hand, also number of frauds, including online internet frauds, grew up substantially. And another advice that could be derived from the pandemic to many people could be to avoid shadow income because at least in Russia, many people they work unofficially to avoid taxes. And when the pandemic came, and for example, their businesses suffered or they lost their jobs, unofficial jobs, so they couldn't get much of their support from the government. And maybe in Russia it was not so big, but still there was some support. I think for many people it was useful. And uh, in other countries, at least in Europe, there was even bigger stimulus from the government. And I guess there, if you don't work and you don't get this stimulus, probably you are in a bigger trouble. Okay, let's start with this fourth point. It's called be aware of frauds. Uh, we'll consider several common types of fraud. And if we do not consider something you heard of, so please share. Let's start with so-called forex dealers with quotes. Why with quotes? Because they're actually forex dealer is actually an official. It could be an official organization acting like normally. They just provide access to the currency exchange, and so nothing bad in this function. Where can the problem come? First of all, there could be just misselling. So it could be either fraud, like fraud is a illegal, like a crime, and misselling, as we discussed yesterday, it's not illegal yet in Russia, but still it's not a good thing. And misselling could be that they could call you and promise that you'll earn on forex. Forex is a foreign exchange market, exchange of currency, and they'll teach you how to earn forex. This is uh, an example. But also sometimes and quite frequently, unfortunately, it could happen according to the following scheme. First, they invite you, they promise that you'll earn something, you could believe them. They invite to try with a small amount of money, like a really small one. And as soon as you give a small amount of money, they show you immediately that you multiplied your initial investment very fast, like I don't know, tenfold. Even if you did not, even if the market went another direction, actually you lost, they will still show that you earned a lot of money. And it's supposed that people should say, oh wow, cool, I'll give you more money. And if you do so, they'll get your money. And if you do not and try to withdraw these first profits you made, uh, there will be some technical problems or some rules that you can only withdraw around some and you need to first put more in your account, etc. So it's uh, quite a popular case, unfortunately. And here is a picture. I just couldn't, I saw it and I couldn't help putting it here because that's exactly kind of pictures which is used in such ads usually. And how to earn in forex without starting capital. Um, so according to this ad, you don't even need to have any money. But what actually happened in this in this case, when you're invited to do something on Forex without starting capital, you are actually being lended the money. So technically, you borrow the money from those organizations, and they usually charge extremely high interest rates that you may not even feel, but still you will actually you are not profitable in this. So, and how to recognize such potential problems with mis-sellers on Forex market or just a fraud on Forex market. First of all, again, I already mentioned this point. First of all, they promise that you earn money, and there could be no guarantees of this kind. Actually, this works not only for Forex, but for any market. And so, but for Forex, for some reason, I don't know, you can share, if you do not live in Russia, you can share in the chat if this is a common case in your country, that you have some suspicious ads that please come to us, give us money, and we will teach you how to work with foreign currency and earn it. But in Russia, it's quite a common case. So if you're not living in Russia, please type in the chat if this is the case in your country. Also, it's Forex dealer is official. Such type of organization officially exists. So, if you, in some case, you need like a normal actual Forex dealer, you should try to check their license on the internet. Also, in the central bank site, I believe there is some portal to check if every organization has a license or not. And also another ring which works for Russia at least, if such organization would call themselves foreign forex dealers, it means that they work illegally, because in Russia it's forbidden to make forex operation with Russian money via some foreign organization. Yeah, I see in the chat, common in Nigeria as well. So you see, it's quite a common problem. So let's move on. Another thing quite popular in China, the same. Yeah, not only Russia. It's
I have a question.
Yeah.
Yeah. So on Forex, is it that it's not possible to actually make profit, or what's the idea of Forex? Is it something for making profit, or is just like a system?
No, Forex is actually, it's just a name of the market of the currency exchange, foreign currencies. So Forex is it's actually just a name of the market. So you know that somewhere you can buy currency, and this market is called Forex. So it's not like some place or some infrastructure. It's just to emphasize that you're buying or selling currency. It's possible to make profits, but if you just get lucky. For example, you buy US dollars or euro, and they grew up in price, or your domestic currency fall down, and you can make money. But the problem is that it's quite a gamble, because it may go down as well. So, and there could be no guarantees. So if someone says that we will teach you how, if it were possible to predict foreign currency movement and exchange rate movement on a regular basis, so probably everyone would be doing this. So, but so far, no stable, no model which would regularly and stably predicted the foreign exchange movements. So far, it doesn't exist.
Okay, because I know of an organization. So what they claim to do is Forex. So the idea is you make an investment in the company, and after some months, you get a particular amount in terms of profits for the amount you invested. So I just wanted to be clear whether it's actually possible to make profit off Forex.
Yeah, it may be possible, but it's about the same possible as to lose money that you invested. So the problem is that no guarantees, and no secret. We will teach you how to do this.
Yeah.
Here's a question in the chat. So when we buy some dollars in any bank, it means that we trade on Forex. In some way, yes. It's actually not we. When we buy currency in the bank, it means that the bank is trading on Forex for us. But yeah, in some way, yeah, we can say that we participated in Forex. It's just some general word to describe all those operations. Okay, let's move on. Another popular fraud scheme in Russia recently, like a lot, is so-called a call from a bank security service. It usually, I think, it happens before some data leaks happened, and then you may be called from someone who is claiming to be from the security service of your bank, and they may even call you by your name, and they may call from the number which looks like an official number, which is like, very sophisticated today. And the usual feature of those fraud that they may be threatening with you that you made some transaction and this transaction was suspicious, and if you do not want these transactions to happen, for example, they may say that hi, this is a bank security service, you are about to transfer $300 to some account, and you are like, no, I didn't. And and then they offer you to stop frauds, but saying them some confidential information of your card, like some secret code that you got in a text message, some CVS code from your card, or a card expiry date, and then they will use this. They can use this information to withdraw money from your account. So I'm sure that most of you heard of such cases, or maybe even some of your I don't know, some of people suffered from this. I saw many times or heard many times, and even I got such a call once. So, and during the pandemic, because many people started to using such services, the number of those frauds grew up significantly. But there a unusual thing is that in Russia, up to half of these calls happen from prisons. Maybe some of you heard of it, but this even already became a meme in Russia, different types of meme, because actually there are actual call centers in prisons, and there was even official news that, for example, Sberbank, the biggest Russian bank, they just organized and how to say, organized a right to a prison to undermine those call centers in prison. So this like an official news was some times ago. So, and here is a picture of the famous Russian movie Gentleman Udachi, and here is this main character pretending to be a prisoner when he's not, actually he's not. So what could be suspicious? I think this works for frauds quite good, quite well, because I even know people who works in a bank. I don't know, it's some kind of psychological thing or something, and I know people who even works in a bank, so it's like their job to know things like this, and still they didn't recognize fast that what's happening, and they almost tell their data. So be careful. What could be suspicious? For example, they call you first without you making any transactions, anything. They call you first. This is not common. They usually start threatening with some money loss. For example, you are about to make a transaction. If you didn't do this, stop it by telling confidential numbers, or vice versa. They may tell you about that you suddenly became rich, like you won a lottery or inherited money, and to get them, please tell us the number you just got in your text message. So they ask you to provide. This is like this line should be read, because they ask you to provide personal data, codes, passwords, some codes from your plastic card. This is like a red flag. This is just a you should cancel the phone call in this moment. And usually they rush people with the decision. So please hurry up, because otherwise your money will be gone. So this is quite a common case recently. The next topic is Ponzi scheme. You can see classical Ponzi scheme. Please write in the chat if you heard of what Ponzi scheme is. No, I see one minus. Yeah, exactly. MMM. Yeah, Ponzi scheme. Okay, I'll wait for more pluses. Good. That's a good thing that most of you are aware of those schemes. So Ponzi scheme is the idea when the organization actually makes profits not from some investment in some good business entities, but instead they ask their investors, to attract more investors, and those new investors attract new investors. And so when you invest money, they like go up through the mountain, and people who are in the top, they usually make money, and people who are at the bottom, they usually lose their money. So sometimes those schemes, they may be open, so they may say, okay, yeah, that's how we work, but this is not true that it doesn't work. So everyone will be happy, and here even our arithmetics and everything is working. So they may be open about that they doing the Ponzi scheme, and sometimes they may be pretending pretending to be some investment company, which they're not. So, and their typical features that they promise extremely high returns and guarantee that everything is safe. The probably most suspicious thing of the Ponzi scheme is they urge you to invite friends and new investors. So this is probably every project do so, but when this is a core feature of the business and you feel it like this is the core feature, so you have to invite new investors, or you are like nothing will happen. This is probably Ponzi scheme. And of course, they usually does not provide convincing information. For example, they can be saying that we are an investment company, but in fact, when you trying to check it, they do not show where to invest, where they invest, and etc. Okay, and here, yeah, as someone mentioned in the chat already, one of the definitely the most popular Ponzi scheme in Russia was in Russia in the 90s. Also, it was one of the largest Ponzi schemes in the world. There were other examples in other countries, but MMM was a Russian company which was organizing the largest Ponzi scheme. And if I'm not mistaken, they were open about the nature of their business. And as a result of this, up to 10 million people lost their savings. Many people committed suicide because they lost everything they got. And here you can see this face, which is very famous in Russia. I'm sure that all of you, almost all of you saw this face. This is Sergei Mavroly, leader of this Ponzi scheme. He already was in prison, then he got out, and now If I'm not mistaken, he's not alive anymore. And here you can see a link here below. I will show this during the lecture, but this is in Russian. So this was an ad on Russian TV of this scheme. And I think actually, even if you don't understand Russian, it's still fun. The picture is just amazing. Okay, next. Next fraud example would be phishing. Phishing is when you got some message, or usually it's some email, and this email is from someone who is pretending to be a real serious organization, and usually their aim is usually obtain some data of yours, some personal data, credit card information, and so on. And here, this is just a picture from the internet that they are usually quite standard features, so I just copy pasted it. So what another thing I guess is not stated here, that usually they don't know your name, so they may say you, for example, dear customer, so without saying your name. If they are like not professional fraud, they not super professional, they can be using a bad grammar, making mistakes. There could be some suspicious links that, for example, you could be asked to follow. It would be something like follow the link to see the details. There could be some files attached which are not PDF and docked. It could be some EXE, EXE files, and so on. And usually they do not provide any contact info, so you cannot call them and you know, and to check that they're real. So I'm sure that you're familiar with those types of email, but just in case if someone is not. Okay, other popular approaches. At least what we heard of recently a lot is, for example, when you're trying to sell something on the internet, you may get a call, and this call would be from a potential customer, and this customer would ask you some personal information, like about your card, like some SPS code or something like card expiry date, and he or she would probably be claiming that they need this information to transfer the money you to buy what you're selling. Another popular thing, and I'm sure that at least if you live in Russia, you got such messages on social networks from your friends many times. When, for example, from some account of your friend, you get a message that he or she needs help as soon as possible, some health problems, there was some accident, some catastrophe, and they ask you to send money. And, you know, it's easy to get emotional and and do this even before you know you think. Okay, another popular type is that frauds may be pretending to be some employers, and they may be offering you a dream job and asking you to download an app full of viruses or to follow the link. And of course, those links could be providing access to some of your personal data or to your online bank and so on. Or you may be just called, you know, with some attractive investment opportunity, like please invest in coronavirus vaccine and so on. Please give us your money. So how could you avoid frauds? What do you think? What could be your advice? You could type it in the chat or use your voice to, you know, to make assumptions. So I see another plus in the chat, which is I'm not sure what it is about. Don't trust
Okay.
him.
So I think probably last week, I got a message that a coronavirus vaccine is out, and they told me the price and a phone number to call if I wanted the vaccine. So I think to avoid some of these frauds, the easiest way is to double check like whatever information you're getting from them, whatever their company name is to double check this name or this service on the internet to make sure
Yeah,
that they actually exist before putting your money or your time. And like you said, in terms of personal data codes, that those are, I mean, once I hear that, I just, because I know my bank will never call me if anything happens. Most times I have to call them, be the one to call them. So most times when I get send your code or your password, I just know that this is
yeah.
fraud.
Usually that's true. That's true. So the common advice. This is just. I mean, this is common advice. No special knowledge, but still, if you get a suspicious call, you may just hang up and just call back with the official number, because it will be fine. If the call was real, this will be fine. If it was not, you'll find out. And also, I found a recommendation, even it was official recommendation from the Central Bank of Russia, that when you do so, you should probably type, for example, even if you see the official number, so they called from some official number, it's better to type it by hands when you call back, because you know it could be that sophisticated, at least according to what is stated on the Bank of Russia website. Now it's this level of fraud. Uh, Also, I think important thing is that so we're quite young people. We all have access to the internet. We all like follow the news, and we know those things mostly. But often we have older relatives who are not so aware. Maybe we should also talk to them, and uh, especially when it comes for some computers, it's probably a good idea to help them with antivirus and so on. And of course, you should not tell anyone your personal data, some secret codes, passwords, and so on. And this is like a red flag. If someone is asking, they're probably frauds. Not go on suspicion links through from the strange emails. Don't hurry up when you're asked to do something with your money. And when you get those messages on the internet from your friend, it's usually it's absolutely better to call back before making transfer if you're going to. And of course, read about popular fraud cases. There are a lot of them on the internet, so uh, probably I'm sure that most of you heard of everything we just discussed, but just in case to make sure that we are all on the same page. Okay, the next financial lesson on the pandemic, according to this list, would be to have a financial plan. Um, what is financial plan? It's quite not hard to do this. I believe it's more about the discipline, but here are some general recommendations how to approach this. First of all, it would be a good thing so to understand why you need this plan. Probably you have some goals. And if you have a big goal, for example, you want to buy a car in 2 years and you need this amount of money. This would be first step to understand that you want something, how much it costs, and why you need this. And then you may prioritize. For example, if you want to buy several big things, you may understand what is more important, what is less important to you. To estimate your budget. To estimate your budget is how much can you save per month or per week or per day. Because you know, if for example your salary is, I don't know, 20,000 rubles, you probably cannot save 19,000 per month. This is not real. Uh, Probably maybe consider alternative ways of financing. For example, maybe it would be more reasonable to you personally to take a car loan. For example, if you need car a lot, you go by car a lot, maybe it makes sense to buy it now and then just be paying the loan. And of course, make a plan and follow it. I cannot tell you how to make a plan. It's quite a simple personal thing, but here is just some example. Here, how the structure of this plan could look like. Um, and so here is from the left, you have, remember, like we have assets and liabilities. So our assets is our income, it's salary, usually some allowance, pensions, and so on. A scholarship, for example, for us. And expenses could be some regular expenses like bills, I don't know, sports section, pocket money for children if we are talking about family plan. And there could be also some liabilities as mortgage, loans, and could be a saving part as well. So saving for retirement, saving for vacation, and just saving just in case. And that's how it looks like. So in this case, those people have, apart from all necessary payments, they have, this family has 22,000 ruble left per month. So, and of course, backtesting. Backtesting is the good thing to do for every plan, not only financial plan, for every plan. And it means that from time to time you need to look at how it's going, and if you actually can follow your plan, or it should be readjusted, because sometimes we can overestimate our discipline, and probably it's better to stay realistic. So here are some. Please type in the chat if you are using any financial planning applications. Maybe you know something. I don't use them much, but those are just a recommendation of Bank of Russia, and I just found them on their website. So if you're interested, you may take a look. So it's a good budget, CoinKeeper, Monify, Money On, and Easy Finance. And now I'm not sure how necessary they are, because first of all, because you may be so, your discipline may be so good that you just remember everything you spend and everything you need to spend. But also, I believe that online banks usually have those trackings of all your expenses, and now they even show the categories, like for food, for supermarket, for restaurants, for transport. So you usually, at least in every bank I can see this details, and to see how much I spent per month on which category. So no suggestions in the chat on financial planning applications. Okay, so maybe you can take a look if you're interested. And of course, I believe the most devastating lesson was for many people to make savings. The same for companies, because many companies could not survive without customers for several months. Not most, but many of them. So, and here I want to tell you of so-called model of three capitals. This is just one example from a book of financial literacy that I read. And of course, model of three capitals is just one of many possible approaches that you can use to structure your, your income, your fund, your money. But I think it looks quite reasonable, and I decided to share it with you because you may be not using it. You might be not using it, but still they show how you could approach it, and I think this could be useful by itself. I see in the chat, I use one money, but often forget to add some operation. Yeah, the bad thing about those applications, at least as I know them, maybe they could be different approaches, that you need to type all the time of what you did, and this is like time consuming. Okay, so model of three capitals assumes that you are, in your mind, you divide all your capitals into three parts, so-called current capital, reserve capital, and investment capital. What does it mean? So current capital is what you living for right now. So those are your current needs, like coffee, your rent payments, bills, your clothing, and so on, going out, and things like this. How much should this be according to those model? It should be enough just to cover all your needs without, but not with but not with some excess, because it's not clear where to stop. For example, I want to drink coffee every day. I want to go to restaurant every day. I want, I don't know, to go abroad every week, and so it's everyone should decide for him or herself where to stop. So everyone should define his or her personal limits of how much it's acceptable to spend, and to answer the question of how much. So what's important about those money from those part of the capital? The important thing is that liquidity. What's liquidity? Liquidity is how much can you turn your asset on cash. Usually it's for current capital, it's cash and cash equivalents. It could be as well term deposits, because you can get term deposits anytime you want. Withdraw money from term deposit anytime you want. But usually, I guess the most intuitive thing here is just cash, just keeping cash using debit cards. So reserve capital is more assume a bigger amount of money. I think for students, of course, most students probably do not have this much money, to save for reserve capital. But still, I think the idea is good to keep in mind, and to maybe, remember about it like in 10 years from now. So what is reserve capital? Reserve capital is the money you have for in case for some unpleasant surprises, like if you have some health problems, you need to have a surgery suddenly. It's always unexpected, not always, but sometimes it's unexpected, from the job loss, maybe your business will be in crisis, I don't know, maybe in case of the pandemic, and so on. How much should it be? Ideally, it would be enough. It should be enough money to maintain your current level of life for some time, and this time should be enough to cover for you to find a new job, to recover from surgery, to survive the crisis. To adjust your business to changes and so on. I think it's again individual thing, but authors of this model and of the book where I wrote it, they suggest this period to be approximately 2 years. So ideally, this would be amount of money which would cover your expenses and maintain your level of life for 2 years. This is quite a lot of money, but I believe when you're like already stable in your career and successful and so on, that could be more than possible. And also here another important thing, so it's safety. So of course for the purpose of this part of the capital is safety. So just in case something happened, you must be safe. So of course it would be reasonable not to invest those money in some risky things. And safety things, it could be like low risk instruments like bonds, for example, or buying insurance, and so on. Another part, the last part, is investment capital. Investment capital is so technically it's like when you cover all your current needs. So you have money to live right now. You have money to cover just some accidents as reserve capital, and the rest you can use for to grow your capital and to get additional gain, to invest to some more complicated instruments. So how much should it be? Just whatever you have left and you're ready to invest. And here, of course, income is the most important part, because if you want to grow your capital, and you do not care so much about the safety and low risk as in reserve capital, the income probably would be the most important. But this is again, this is just this model of three capitals is of one of many approaches how you can approach this. This is not a rule of thumb or something like this. But I think it's interesting to to look at some structures recommended um, by by the finance people who wrote books on financial literacy. Passive income, another way to save yourself in case of something happens is to have a passive income. You probably heard this word. Passive income is a source of income that requires little or nothing from you. What does it mean? Some examples could be deposits, for example, or bonds. When you make a deposit, you don't have to do anything. You just get your interest from time to time. And if you have a deposit amount large enough, I don't know, for example, you want your passive income to be, I don't know, 100,000. Okay, it's probably too much. 10,000 rubles per month, for example. Then you should probably, how much you need to earn 120,000 per year. And if we assume, for example, 10% interest rate, that would be how much? So 12 million, right? Yeah. So if you make your term deposit big enough, so you may have passive income which would support you during the hard times. So another example could be to invest in funds, in mutual funds, for example, who manage money for you. Why is it passive income? Because you just give them money and you do not, you do not have to do anything. Another thing could be real estate. It's popular, I guess. It's when you buy an apartment and you just rent it, and you every month you get some payment, a rental payment. And another example, another classical example could be intellectual property. And I think this could be relevant to Skoltech student as for no one else. What's intellectual property? For example, you created some invention and you want to make a patent, or you started a business, you want to make a trademark, and if it's successful, you'll be getting some royalty for it. Okay, any questions so far? Today it's even more silent than yesterday. Okay, no questions. Saving for retirement. Let's think about about the times when we get old. You know that average pension in Russia is currently around 15,000 ruble, or $200 per month, and as you understand, it's I guess for most people it's not enough to live as they want, or even normally sometimes. So if you want to have more money when you're old, you should probably be saving during your life. And here is a question to you. How could you approach this problem? For example, assume you want okay, I was supposed to let's move to another slide because I wanted to make another task for you. Assume that by the time you retire, you would like to have 10 million rubles in saving. How much should you be saving per month? How would you approach this question? Please share ideas when you understand how much money you want to have when you get old. How would you approach this problem? What you need to decide, what you need to set. Any ideas?
So as you have already mentioned, we have like three model system. So first of all, we have to think about current spendings, reserve spendings, and then investment is, as far as I'm concerned, is that 10 million of rubles. So it's an investment part. So we have to consider two other groups and then decide at each period of our life what salary we have and how much money we can save. Maybe we can like save all the rest money and we will be able to cover 10 million, maybe not. So it depends on our salary.
Yeah, sure. It depends on salary because, of course, um, you cannot, make your pension funds infinite. Um, yeah, you could be. Yeah, about the three capitals, it's more like a tool how you achieve how could you achieve those goals probably. So yeah, we can consider it as an investment part probably, or we can consider it as a part of your reserve part because retirement is something that probably you need money for. So it's kind of a part of a safety, but more like a technical question. How much should you save per month? What are the ways to understand this and to answer this question? Uh, First of all, when you make this problem a calculation problem, you should probably define some parameters like what will be duration of my active career, right? Because to understand how much you need to save per month to have a 10 million rubles in when you retire, you need to understand how soon will it be. So how long will career will be? For example, I want to, I don't know, retire when I'm 70, or I want to retire when I'm 50. So, and when do you start to when do you plan to start saving? Because of course, not everyone, as soon as we as graduated, start saving for the retirement. This um, probably such cases exist, but um I haven't heard of them. So people would start saving for the retirement like in 22, for example. This is not a common thing, but maybe it happens. So what you should also somehow estimate what would be the average return on your investment, because this is not an obvious part because we never know how the market would behave. We don't know what instruments will be available like in 10 years, but still somehow there are some ways to approximately estimate what average return you may count on when saving for retirement and investing those money. And of course, you need to understand if it's realistic or not. Uh, you should probably understand what your target income would be. And let's consider such an example. This is an example of a happy old person who saved for retirement. Do you know who this guy is?
Warren Buffett.
Yeah, everyone familiar with Warren Buffett. But anyway, uh, Warren Buffett is it's not that important. Just it's a famous person. It's one of the richest people in the world. He is 90 years old now, and he just made his money from the investment poorly, and he's really rich and famous for this because he's rich. So let's consider such an example. For example, I answered to this question like this. My duration of my active career will be 40 years, and I want to start saving for my retirement right now. And I estimated somehow that my conservative average return uh, would be 5% during this time. And for example, I want at some point my average target income to be 300 rubles. For example, at some point it may be less when I'm young. In some point, maybe it will be more. Um, let's consider how I need to switch to this. I prepared a small model in the Excel, and you may be paying attention now because I'll ask you to do a similar thing as a home assignment. Here it's already ready. Let's assume that it's not ready yet, and I'll do it right away for you. Let's assume that my active years would be 40. It starts from now, and 40 years from now, I'll retire. And I estimate my average income per month as 300,000. So my income per year would be 3,600,000. And I estimate my average return on investment because, it makes sense to not just saving money, keeping under the sofa, but somehow invested, maybe in the very, very conservative low risk instrument, but still. And I want to have 10 million rubles by the time when I retire. And I need 40 to make a model for 40 years. Let's consider how much I would need to save in annual terms, because in monthly terms it would be not so I think it would be like more like savings per year. This is where I would be calculating how much do I need to save per year, and here I would be calculating my total, for example, my total saving amount. So how much I would have. Let's use some random number, and then I will use it, calculate like a solver to get a more correct number. Saving. Let's start, for example, with 100,000 rubles. And yeah. So the question is, it's clear that for the first year, I will be having the same amount of money as I saved for the first year because I have nothing else. And the question is how in this model to calculate what would be the total saving amount by the end of the second year.
We should multiply savings per year by 1.05.
Yeah,
and previous year.
I assume that from previous year I would be investing at this average rate that I estimated. So I would need to multiply it by. Sorry. I assume that I invested it for 5%, and now I can enjoy my interest. But also I'll make a new investment, and it would be also added to this total saving amount. So and here, that's how I can calculate the total the current status of my saving for every year. And here you see that if I just save 100,000 ruble per year, I will have $12 million by the time when I retire. But I need it to be 10 million, yeah, as I stated. So here, sorry, my Excel is in Russian, but I'm using the solver now, so it would be like that in this how it's called, in this cell I want to have 10 million value by changing this cell. So here is the solution to make it exactly 10 million. By the time I retire in 40 years, I need to save 82,000 per year. So, you know, when you have income of 3.5 million ruble per year, 82,000 looks not this much. And let's calculate what is this as a share of your income. Of my income. This is my model. So it's something around 2%. So this is quite not this much. And we could also arrange those. We could change the parameters. We could say, okay, 5, you know, for 40 years, you cannot guarantee that it would be 5. Maybe it would be 2, or maybe your salary will be lower, and still you will see this power of the compounding, that you invest and then you earn interest on interest. You remember we discussed yesterday compounding interest. You will see that the power of compounding usually allow you to save it without, you know, much sacrifice of your income. So any questions on this part? Okay, so and here exactly what I got when I calculated it before. Okay, no questions. Okay, let's continue. Let's talk about traveling.
Question.
Yeah.
So the analysis done, it doesn't consider passive income, because there's no way you can actually can you actually calculate for passive income in terms of
No, it may be why do you think it's not considered? Maybe income per month is not necessarily savings. So this could be also passive income. You know, usually you have a passive income when you already have some savings, but you could also make this model more complicated. So of course, this is very simple model. Of course, your income will be changing through life. You may make some assumptions about it. Your average investment may be estimated in a more complex way. Also, you may have different targets and so on. You may be starting saving not right now. You may start from somewhere from here, for example. So yeah, it may be, the model may be adjusted in different ways.
okay.
Okay, let's talk about traveling. Traveling. Also, again, if you, I don't know, if you experience traveler and you have some life hacks, please share with us in the chat. So here are just some common recommendations. I guess you heard of it if you travel sometimes. Maybe some of you did not. So one of the main recommendations when when you start to plan your trip, and you probably Google, and often you may notice that for some countries they may recommend to have your money in cash, at least partially. And why is that? First of all, because in some countries payment system may be different from yours. For example, it may be the case that you take your card and it will not be accepted anywhere just because of the payment system or because of some bank conflicts and so on. Yeah, it may be also the case that it will be hard to find an ATM which will be charging acceptable commission, and you will have to spend quite a lot of money on this. So it's easy. It may be comfortable, convenient to have money in cash for some paying. Also, be aware of conversion commissions. If you have time, you probably should plan in advance when you will be buying foreign currency. when you're in Russia, for example, you may use the best bank you may find with a commission. You may also buy currency on Forex. You may use your brokerage account and so on. Sometimes they advise to notify your bank about the trip is made. Actually, I never had such a problem, but I heard about it all the time. That if your bank doesn't know that you go abroad, it may block your card when you do operations abroad. So because it will be considered as suspicious, and your card will be blocked, and you will not lose your money. But when you're in another country and you have your card blocked, this is not a good situation at all. And in some banks, you even have this button when you just press the button and say, okay, I'm going abroad from this date to this date. So it's okay, please don't block my card. So another useful tip, this is not maybe obvious, but sometimes it's recommended to use credit cards abroad. Why is that? Because of the final responsibility if something happens to the card. For example, if frauds will get your card and withdraw money, if it is your debit card, then that would be your own money, and if you lose them, that's your problem. You may, of course, say, okay, I don't agree, and I'll go to the bank and start conflicting with them. But in general, it will be much better problem than if you lose your credit card and it will be taken by frauds. In this case, it will be money of a bank and it will be not your problem. So the probability that you will suffer a loss is lower if you use credit cards. And the same works also within your country, at least within Russia. I guess in other countries it works like this as well. And another popular thing to save up some money when you're traveling is when you're buying something and you may use tax refund. Please type something in the chat if you are familiar with the tax refund concept. I'm just wondering. Oh, good. Not everybody is familiar. So wait for more answers. Okay, most people familiar, but several people are not familiar. And this is a really useful thing. Even if you haven't used it before, you probably will at some point if you're going to travel a lot. So tax refund is when you can buy things and then you may get a return of money right in this country. Just because you're not a citizen of the country, sometimes you are allowed to get the tax part of the price back. Usually the shops which provide you with tax-free shopping, they have signs of something like this, or sometimes they don't even have the sign, and you may just ask them, do you have tax refund? And sometimes they may say, yes, we do, and they will give you a form to fill in, and then you may come to the airport. In every international airport, I'm sure there is such a window with a tax refund sign, and you will bring those checks and those blanks the shop gave you to show here, and you will be either given the cash money right away, or you'll just get, or you'll provide them with your credit card information and they will send you money back later. So this is a really cool thing, and this is good that we have it. So we have something in the chat. I remember in Russia the bill on shop is money. It depends. I believe it depends on the shop. Some shops probably don't have it. I don't know. Maybe Russia have some special tax-free policy, because of course I don't feel it on myself because I'm a citizen on Russia. But at least in Europe, it must be quite the same everywhere. And for example, in Japan, you don't even need to do all this because according to Japan tax refund policy, they don't give you to fill in the blank to get a tax refund later. They just, if you show your passport, they will subtract those money from the price right when you're in the shop. And this is very convenient. For example, if you're going to Japan and you want to buy, I don't know, the last iPhone, it may be very convenient. I'm not sure about what is the size of the tax they offer, they have, but it's about something like 15% or so. So it could be substantial. Question in the chat. Yeah, you only several big shops and supermarket in Russia can ask for the service. Yeah, okay. So this is an advice for those who are going to Russia and hoping to have a tax refund. So tax refund actually available not only when you're going abroad, but also in your country. At least this is actually general advice to check if you have it in your country. But in Russia, citizens of Russia definitely have such a feature of such tax refund or tax deduction. This is a different thing that from when you're going abroad. This is another a little bit different nature of this of the thing. You know that in Russia people pay 13% of their income as taxes, and if you use a tax refund in Russia, you. By the way, please type in the chat if you heard of, if you know what tax refund in Russia is, or in your, if you have it in your country when you return the income, your income taxes. Several people know. So that's it. Anyone else? Okay. Tax refund in Russia. Let's. I will be telling about example of Russia, but let's please check. Maybe you have a similar thing in your country. I just don't know. In Russia, you may return part of your income taxes if you paid, for example, for medicine, for education, for real estate. For example, you bought an apartment for if you bought insurance, if you have some specific type of the brokerage account. We will probably discuss today this type of brokerage account. Sometimes you may have tax refund if you have small children. Almost in every point of this, you have a lot of details. For example, in education, you may only return, something up to 120,000 rubles, if I'm not mistaken. But still, for how it works, usually, for example, I paid for, I don't know, let's assume I bought an apartment, for example. I can collect necessary documents. I can go to my employer or to the tax service in Russia, and I will say, okay, I paid for real estate this year. Please return those money from my income taxes, and they will pay you quite substantial amount of money. This is especially relevant for big things like when you paid a lot, like for education or for apartment and something like this. So this is a real thing. It's quite. You will definitely hear about it a lot later when it will be relevant. I mean, in case if you didn't hear, because everyone who typed something in the chat put pluses, but I'm just telling in case that if you don't know. Okay, here it is. That's it for this part. Here is for home assignment. I'm asking you to make an Excel model which would be similar to the one which we consider today in Excel. It was quite simple, so I just did it. In 2 minutes. But I suggest you using a different set of assumptions, make it more complicated. You may use it like all the same, just choose your own set of parameters, but please, here I ask you, now assume that your income is changing and you're not just saving some fixed sum like 80,000 rubles, but you now let's assume that you will be saving some fixed share of your income, for example, 5% from your income. So now the parameter to define is not the sum, but the share of your income. And to show some dynamics, you may assume that your income is changing linearly or exponentially or whatever you want. And you should also make some assumptions about how long your career will be. Maybe it will be 30 years and then you will be done. What would be your investment return? You may just assume it, like it doesn't need to be, supported by some serious proofs. Just make some assumptions, or you may use 5% in the lecture in the class today. Assume something about income dynamics and set your own saving target. I'll also upload this on Canvas. It's not there yet. Any questions on this part? No questions? Okay, let's then make a break for 15 minutes and then we will start the investing part. So if you're waiting to discuss investment, here it will be after the break.
I'm sorry, I have a question. I'm sorry, I forgot
Yeah, sure.
about using credit cards abroad. I mean, if the fraud will get my money, I need to prove it to the bank because it's not that simple that I'm just like, okay, it's not my problem. I need to prove it to the bank, right? That it's
Yeah. In general, you're right. Actually, I was not in a situation like this, but it's generally considered even. So officially, even central bank is stating in their policy and all their websites. So if you're using credit card and you become a victim of a fraud, you have a right, to say that it's not your fault. I'm not sure actually about the procedures of how you're supposed to prove it. You probably just need to go to the police abroad and to say that my card was stolen, for example, something like this. But really, I don't know the details.
okay. Okay, thank you.
But if you somehow manage to prove it and to tell about it as soon as it happens, then probably you will be safe. Okay, let's make a break for until. Did I answer your question?
Yes, thank you.
Okay, let's make a break. Until 11:35, right? Okay, I think we can continue. I have a lag in my time on my laptop, but I know it's 11:35 already. So now we're starting the investing part, and we will continue with it until the last day. Sorry, why is it so strange? Sorry. Here it is. It's okay. Okay, so we're starting the investing part. We're starting talking about investment, and we will continue to do so until our last class, except for ones with presentations. So what's investing? Investing is an allocation of your resources, of your money, in aiming to provide some income and profits. So why would people invest? First of all, because they hope to make money with it. People want to preserve money and to grow capital. Yeah, we have also standard banking products that we discussed yesterday. But sometimes it may be the interest rate on term deposit may be not enough, for your goals. Also, it may be even the case that those exactly as it is a situation in Russia right now, that our term deposit interest is lower than inflation rate. So if you invest and you make it smart and not risky and it works out, that it would allow you to beat inflation and to earn more than inflation. Because otherwise, if you just keep, money under the sofa, inflation will be decreasing the money amount you have. Not the money amount, but the real working force, of those money. And potentially, of course, if you're lucky and if you spend a lot of time investing that, you even may build wealth from not so much capital. It's not like a common rule, but sometimes it happens. For example, for Warren Buffett, remember this guy from we just discussed. So, three dimensions of an asset. Each asset may be characterized in different ways, of course, but those are three major things that everyone cares about when investing. Is return. Return is how much your income is or you expect to get. Risk is how safe is your asset, and liquidity. And liquidity is a feature describing how fast you can turn your asset into cash and not to lose its value. For example, you probably saw that sometimes people who need money really, really soon, they start selling their apartment, for example, and they give a huge discount because they need money and they need to sell the apartment as soon as possible. And this is an example of the illiquid asset. Asset because so you need to make a huge discount to the real price of apartment to sell it for cash. And if there would be a more liquid asset, you would not need to make such a big discount or no discount at all. And of course, how do you think, what is the most liquid asset ever?
Money.
Yeah, that's right. Cash itself is the most perfectly liquid asset. Yeah, that's right. I see answers in the chat. Yeah, money is a perfectly liquid asset because money can be, turned into money. You don't even have to do anything. So let's start with liquidity and discuss some examples to make it more clear to everyone. So as we said, liquidity is a feature of how quickly can we turn asset into cash without any discount of its price. And let's play a game please name those assets in the ascending order of liquidity. So start with the most liquid one and then more and more liquid in the end. So corporate bond, money in cash, real estate. What do you think the order would be?
First of all, money, then corporate bond, then real estate.
They
Oh.
may be vice versa. It depends on the region where you buy your estate.
I think in any way, of course, maybe there are some specific real estate, but on average, in general, it's like that. The logic, I guess, is fine, but in the ascending on order, it would be vice versa in case of real estate, then corporate bonds and money in cash. You know that. So this is the most liquid one. Real estate, if you need to sell your apartment really soon, really really quickly, then you would have to make a big discount probably. Of course, if you're buying some, I don't know, some apartment on some cost in the some cool city, then probably there would be a high demand, but still it would definitely take more time to convert it into cash than for average corporate bond. Something else in the chat, cash bond. Instead, yeah, that's right. So here we are clear. And money in cash, as we just discussed, is the perfectly infinitely liquid asset. So risk, as it's clear from its name, is just a chance that something will go not as planned, and their actual gain the investor will get will be lower than he or she expected. And how do you think for those three assets, term deposit, real estate, and foreign currency, which one would be the most risky?
Foreign currency, real estate, then the last is term deposit.
Yeah. Any other ideas?
Term deposit is the most risky one, I believe.
Why do you think so?
I don't know, as far as I'm concerned, and real estate is growing up in price, for example, in our city. And it's growing up faster, and you can also rent it out, so you get a higher percent than in term deposit. So I would have chosen real estate. I would have chosen between real estate and foreign currency, because when we calculate the price of the flat, for example, in the currency, for example, in our case, we witnessed some growth. It's not a huge growth, but at least something. So I wouldn't have chosen term deposit.
Here, be careful, not distinguish return from risk. So risk is not about how much you earned this time. It's how much you may. It's what is the chance that you may lose money, for example.
Yes, and I believe it is the same, because when we have a term deposit, for example, in rubles, if we have some decline, so then we lose its cost. The money loses its cost, and real estate wouldn't lose its cost as fast, I believe.
Actually, why not? During some economic crises, real estate may lose a lot.
It also
It
depends on
the
what
region.
stage you buy your real estate. You may buy a part on the stage of the building where the apartment building is not like built at all. In Russian, it's called like you buy it на этапе котлована. And then the price is growing like 15-20% at least. And now, after some cases with partial buying, I don't know how it's called in English, like долевое строительство, and now we have like special, we have special types of bank operations when you pay the money for the apartment that is not built yet. This money are kept in the bank until the second part of the deal is not satisfied. Like only if the building is finished, the builder will take the money that you have paid for this apartment.
Yeah, this is, by the way, was, I guess, example of the letter of credit that we discussed yesterday. But yeah, about this approach, when you indeed many people consider real estate as investment and buy it on the stage where it's not built up yet. But that is actually why the premium is so big, because sometimes you know, it's still a risk. The building may just start, you know, may just start and may not be finished, or it now our regulators, they are working on it, and this долевое строительство, you know, when you give money to their organization before the apartment is built, I believe it was forbidden, or it is about to be forbidden. That's, I believe, what you told. But still, even if you buy like a new apartment, still there is quite a risk that it will it may lose a lot of its value. For example, during the crisis, one of the reasons of the crisis of 2008 in the world, and it started in the United States, one of the main reasons was exactly the real estate crisis, because people took a lot of mortgages, and then suddenly real estate lost a lot of its price, and people just realized that it doesn't make sense to pay a mortgage when you know your flat costs like twice lower now, and they started, you know, to refuse to pay, and this triggered a crisis. So it may happen anytime, you know. It does not necessarily need to grow. It may as well lose in price. So the answer would be like this. Term deposit actually is the safest one, because especially in Russia, because in Russia it's guaranteed by the government, and if you choose a bank which is good enough, so it's almost 100% that you get it back, and you earn some low but fixed profits. Real estate, yeah, it can also bring money, it can also lose its value. And foreign currency, as we discussed, it may be completely unpredictable. You may buy foreign. I mean, if we estimate risk in terms of our domestic currency, then foreign currency would be uh, it's a very risky asset. It may go unpredictable. Any questions? Clear. Okay. Good. And now let's discuss return. Return is just a profit on the investment of how much you earn. Let's discuss those assets: shares, bonds, and real estate. What do you think is most has highest expected return? Not expected.
Shares.
And what has lowest?
And
Any
bonds
ideas?
is lowest. Oh no, I believe
Bond.
shares has the highest, and bonds probably has the lowest.
I agree.
Bonds, estate shares, estate bond shares. Yeah, I see all answers which we got so far are approximately of the same logic, I guess. I know we have some difference. The difference between estate and bonds.
I guess it really depends on the type of estate, of the country, of the city, no? Because
No, not really. Still, you have some average, and you know, real estate prices they tend to be changing everywhere. So it may be happening not so fast, but when it happens, it usually also quite unpredictable. So it's quite a risk. But I see we have two different types of answers, and but actually this was a tricky question, because for return it's not this clear as for risk and liquidity, and for return it may be different. What is return? We need to define what is return. What return are we talking about? It must be over some period, because sometimes you make money, sometimes you lose money, and this is one example that could be this is an S&P 500 index fund. you don't need to care now about what exactly it means, but this is an index which reflects the state of the market in the United States. So this somehow reflects the state of the whole market, something like a general price of the market. And here we can see then, for example, in this time period, if we invested in this part, for example, in 1997, we would have to wait for more than 12 years until finally some stable growth would happen. So, and 12 years is quite a long investment horizon. So it could be quite unpredictable. And here is another example. This is have anyone heard of Lehman Brothers Investment Bank before? Someone did. Yeah, it's no surprise that you didn't, because this bank it's kind of doesn't exist for more than 10 years already. But the bankruptcy of Lehman Brothers Investment Bank was one of the main events of this economic crisis of 2008. They actually were very successful because it happens, and you see that the price drop happened right before they achieved the record high price of their history. So it may be very unexpected price drop. So it's hard to make such a unique conclusion. What would be, the right order, of those three types of investment. I understand that intuitively you want to say that shares probably bring the most return. Recently, at least it's like this. The real estate would probably be in the middle, intuitively, and the bond would be the most safe but least profitable. But it would not be completely correct to say so, because it really depends on circumstances and on context. Okay, another important thing to understand is the concept of risk-return trade-off. It assumes that the potential return, the higher return assumes higher risk. And here is a simple diagram, but it's very representative. So according to this principle, you can only produce higher return if you are ready to accept a higher possibility of losses. So, for example, if you invest in term deposits, or if you're investing in bonds, you may not care much about your losses, because this is more or less, in general, safe and conservative instrument. But at the same time, you know that you're not going to generate some extra super profits. And if you are, here you can see this diagram, risk and return balance. So this is kind of a curve of medium. So you may choose to invest here at a lower risk and lower expected return with a small, small distribution of possibility of different outcomes. If you choose a little bit higher risk, then possibility of difference in returns is higher, but also expected return is higher, and so on. And the higher the risk, the higher is expected return, but at the same time, the higher is this difference in outcome. It may be very good, and it may be very bad. And if you are hoping to get super high return, you must be ready for this. So this is an important thing to understand, because it's kind of important psychologically. So before start investing, you need to understand what is your acceptable level of risk. For example, I'm quite risk averse person, so I don't have this nerve when the market is jumping and I'm like no. So it's hard. It can be psychologically hard. So everyone must decide on his or her own if he's ready to to go through this volatility. And here is another example. This is just one picture from the internet with one of possible examples of what type of assets correspond to what place of the risk return curve. Actually, yeah, risk return curve is usually not seen as a line. It's usually seen as such a convex function. So it's not straight, it's convex. And here are some examples. For example, the list, you don't have to understand for now all specific terms which are stated here. I'll just comment shortly on this, and then we'll discuss on the next classes, probably in more details. So the most safe instruments are considered money market securities or government treasuries. Government treasuries are government bonds. So there may be corporate bonds issued by companies, and there may be government bonds. Well, almost every country has its government bonds, and usually treasuries is a special name of American government bonds. At least when I hear treasuries, I know that we're talking about the United States. And money market instruments are instruments that are short, for example, less than 1 year, and you can borrow money or lend money, invest in some debt instruments for less than 1 year, and usually those instruments referred as money market instruments. And when you invest, for short time, it's unlikely that something will happen to a company for example, in 1 month. So when it's short time, it's usually considered more safe than long-time investment. Another stage would be corporate bonds. Investment grade, it means that investment grade corporate bonds are corporate bonds of like stable, high income companies. We will also talk about it later. And then we come to equities. Equities have higher risk and higher return as well, high expected return as well. And equities is a synonym of shares and stocks, as you remember. And those would be large, so-called large capitalization companies like Apple, I don't know, Apple, Twitter, Facebook, Tesla, I don't know, like really well-known companies which are quite stable and which are doing quite good. And the next step on the risk return curve, according to this scheme at least, would be small capitalization equities, which are smaller companies that are not so successful and stable yet. But on the other hand, they bring, of course, higher risk because smaller businesses, they usually have more uncertainty. And but on the other hand, they have tendency to grow, and they may bring higher expected return. And the last would be, to invest in emerging markets economies, for example, in countries with unstable economy, but when economy has not grown yet. On the other hand, it may have a bigger potential where to grow, and their equities usually bring higher risk, but potentially they have higher investment return. Okay, any questions here? We have something in the chat. No questions. Okay. So to sum it up, after this scheme, what type of investment in general? Of course, we will talk more in details about it. What types of investment exist? So the most classical and conservative ones would be deposits and government bonds, the most safe, the most low income as well, probably. Also corporate bonds, a little bit higher income, but also a little bit higher risk, because government is usually considered more safe than a specific company within the country. Stocks. stocks, shares, or equities. Those are synonyms. A little bit more risky. Again, potentially high return. And probably the most risky part of all this would be investing in different structured products where, you know, complicated different instruments are combined to provide some unusual payoff. Metals, foreign exchange, those are like for people who really want to gamble on the market. And also there is a so-called alternative investment, and this would include such things as investing in real estate, in art. Investment in art is quite, I believe it's grows its popularity recently. Investment in wine, for example, also could be an example. And there is also such thing as environmental, social, and corporate governance investing. It also becoming more and more popular recently. It's when investment company state that they are not only seeking for profits and money, but they also care about social good. For example of this could be green investing. For example, investing in a company which only have all infrastructure, you know, to save the nature, or to have all the filters, to have the, how it's called, trash. So you see who manage their trash in a green way, and so on. By the way, sorry.
Yeah, it's called recycling.
Yes, thank you, recycling. By the way, you could also choose this as one of those types of investment and tell about it on our last class. I think it's peculiar. It could be peculiar topic. Investment portfolio. When you start investing, you usually do not consider every instrument you invested in separately. So you usually care how it all combined together. So investment portfolio is a group of assets which is usually considered and measured all together. So you don't care this much how each individual asset worked out, but you more like cared how your portfolio worked out, because it's hard to predict individual behavior of each asset. But when you're talking about portfolio, it's more, you still cannot control it, of course, 100%, but still at least it's a little bit more predictable and manageable. And here, just example of some high level structure of one investment portfolio. So a little bit more than half in stocks, like maybe 40% in bonds, and by around, I guess, 5% in real estate and cash. So how to start when you decided, okay, I want to invest. So first of all, you need to ask yourself if you really need investing and why. So that's a simple question. So you understand that yes, you are ready for it. You do have enough capital to invest. You are ready to, you know, to spend time on this. So how much money you're ready to invest? Obvious question. You need to decide this before starting the investment. And even maybe not more important, but the same important, how much time you're ready to invest. Because, you know, there are two options. You can either do it by yourself, or you can do more like passive investment. Either choose more passive instrument, or just give your money to some asset management fund, asset management service, and they will just do it all for you. But if you decide to do it by yourself, you will probably have to, you know, if you actively invest by yourself, you need to follow the market all the time. You need to read the news, you need to read research, you need to read forecasts all the time. So to be, you know, it also does not guarantee anything, but if you do not, it becomes more like gambling. So if you do not know what's going on with the company, it's a little bit strange to invest in it probably. So investment by yourself, at least active investment by yourself, requires quite a lot of time. You need to define a strategy. The strategy would be understanding what is a risk-return balance you're ready for. So are you ready to take a lot of risk for high expected return, or you're not this type of person, you prefer more, more safe investment? So this is what you need to decide. You also need to define a time horizon, because, investing for example, 6 months and investing for 6 years, and especially investing for example, for retirement, as we just discussed, those could be completely different approaches and completely different instruments, completely different types of instruments. And also you need to choose what types of investments you're ready for. For example, you may say, okay, I'm not ready to deal with real estate, or real estate is not for me, or maybe you do not want, some people, they have principles. For example, they do not want to invest in companies which produce goods like alcohol or tobacco companies. So you need to decide if it matters for you or not. And of course, choose a broker, because you cannot invest in most instruments. You cannot invest by yourself, and you need to choose a broker. Those are just tips for beginners. Those are not just some my tips, because I probably I cannot give you any tips or advice, but those are just general tips. And for this one, those are just official recommendations of the Russian government to their beginner investors. And for me, it looks quite reasonable, so I decided to put them here. First of all, do not invest all money you have, because I think it's clear why, because it may not work out and you will end up without money. Of course, it's even more relevant, when you have, when you like, I don't know, when you're 40 years old and when you have a family, and it would be strange, to lose all your money at once. Also, there is a recommendation to get a training, especially if you plan to invest actively, because of course, this is just our course on financial literacy. I hope that it will somehow familiarize people with what's going on in investment world. But still, if you want to do it like on regular basis, probably it's a good idea to get a training. And most brokers and banks, and they usually provide some free educational courses, so you may look it up, and to understand what is good for you, maybe to take some short course or maybe a longer course. And also we will talk today about how to choose this training place, because they could be different. Also, I think some trading venues, some brokerage account have a demo version, so you may train how to press buttons to do things like this before real investment. But just try. By the way, let me show you. Here would be one example of Yahoo Finance. This is just one I found. I believe there must be more of them. Here you can create your own portfolio, which is not real. Here, oh, I even called it Skaltech portfolio. Okay. Okay, I didn't fill it up yet, but still, for example, here I can create a portfolio and I can call it, I don't know, portfolio 1. And then I may imagine that, for example, I'm starting to add in products here. For example, I don't know, here I may, for example, I'll add Apple shares. I added them, right? Yeah, right. and then I don't know, you may call some company that I need to, I'm wondering if there are Russian companies. Yeah, here is Sberbank of Russia. You may call company, I will add it in my list.
Tesla.
Yeah, Tesla, for example. Okay, and then you may, you just added types of your assets. And here in my holdings, you can, you know, specify what price you bought it at. For example, I bought it today, January 14th, and I bought, for example, price of one share is 854. Let's assume that I am lucky and I bought it with a small discount. For example, early in the morning, I bought it 150 and sorry, I bought 10 shares, for example, at 850. And here is my lot is created. And here you can see that it already calculated my profits, and I can do the same thing, for example, for Sber. And for example, I also bought it today, or maybe let's make it yesterday, or 2 days ago. And let's assume I had a price of, it's a weird price actually. This is not a real price of Sberbank. Maybe it's, and this is not even in US dollars. So, okay, I don't know what it is. Some probably indicator of Sberbank shares, but let's assume I bought it at 10, also 10, no, 100 shares of this Sber related thing at cost of 16, for example. And you see the Yahoo Finance already calculated my my gain. So here I gained on Tesla, here I lost on Sberbank. So that's how you can, I didn't add the same for Apple. And here is my portfolio information. So it shows that now I have portfolio of $10,000. And here is my gain. Why is it so big? Maybe because I didn't specify the last company parameters. So anyway, here is information. Here you can see some daily charts. So this could be just example how you can trade in trading, how you can imagine that you are a trader and to understand how it all changes. It's not the same as practice for trading because, you know, when you have a brokerage account, you may need to, just to understand how it works like in this specific infrastructure. But this Yahoo Finance could be a good example of just, to train and combining portfolio. Yeah, VTB provides a platform with 1 million rubles for training. Yeah, that's good. I didn't know that. By the way, I recently heard quite a very good references about the VTB brokerage account. I don't have one myself, but I was told that they do have quite very convenient, transparent account, which is very, which could be useful for you. I know if someday you're interested. And now Nadezhda said that they also have some training platform. So that's good. Let's continue. So the next advice could be do not get emotional, because sometimes it may be the case that you bought something and then started losing price, and you may start panicking and, for example, sell. But if you act like this, you may be guaranteed that you will be all losing money all the time, because when it will be growing, people will be panicking and buying. When it will be falling, people will be panicking and selling, and this is definitely not the good thing. So getting emotional is not the best strategy, for sure. Diversification diversification actually a crucial thing for investing. We will talk about it later, but in general, it could be described as do not buy all shares from the same sector. For example, if you bought shares of 10 different companies and they all work in oil and gas sector, you realize that your portfolio is highly exposed to the risk of this sector. If something happens to oil price, all your portfolio will drop in price. And this is, of course, if for some reason you just truly believe that oil sector will only grow, that it may be a good strategy, but in general you don't know, and doing like this would be just unnecessary exposure to high risk. And again, do not believe any promises of extreme guaranteed profits, and even do not believe in some extreme experts, because there are quite a lot of research provided in the market, and here are two stories to demonstrate that it does not always work. Here's the first story. I like the story very much. You may recognize this guy. This is Warren Buffett that we discussed already during our operation plans, one of the richest person in the world, and he made his fortune by investing. And here was a case that in 2007, Warren Buffett made a bet with hedge funds. Hedge funds are organizations which position themselves as funds with very smart strategies, that they know how to invest and they know how to make money, and they have like very, very smart strategies. They calculate everything and predict how it will move or something like this. So and Warren Buffett decided to make a bet, and he said, I will be just investing in the market. And investing in the market usually assumes that you choose some fund, which manages some fixed market portfolio, and you just place money in this and it will just grow with the market. So it's a type of passive investment which somehow reflects average of the market. So, and Warren Buffett said, I'll do like this, just passively, just doing nothing, and I'll earn more on a long time horizon than any hedge fund. And so the point of this bet was that just waiting for market to grow is better than, than all smart strategies that you may offer, because those strategies, if they even work, they work only in a short time horizon, and a long time horizon, for example, 10 years, they will not work. That was the point of Warren Buffett. So this is not some specific rule, but that was his point. And one hedge fund accepted the change, and they agreed that Warren Buffett, during all the 10 years, he will just, in the beginning of the period, invest his money in this S&P 500 index. This is an index, as I said, which reflects some average state of the market. And so you have such a possibility, right? If you're not clear about what it means to invest in the market, please let me know. So, and at the same 10 years, those hedge fund manager was actively managed his portfolio. He picked securities smartly, accurately, carefully, and trying to maximize his profits. So, and in 10 years, it was 99% of profits return for Warren Buffett against only 24% for this fund. And as you see in year terms, it was like 7% per year for Warren Buffett and around 2% per year for this hedge fund. So, of course, this is not, it does not say that it's like some common rule. Maybe, I don't know, maybe Warren Buffett just got lucky and those 10 years were just good for the market. But still, this example is example of what that you cannot be sure that there are some smart experts on the market which do know how to invest. And another story was that some guy decided to check in the middle of 20th century. He said, okay, I think that if we give monkeys the darts, and a monkey will be just dropping it randomly to the list of shares, this will be beating the market. So this will be no word that what's going on in the market. And this guy said so in the middle of 20th century, and he simulated results of 100 monkeys throwing darts at the stock and the list of stocks in newspaper. And after I don't know of what year, this is their article of year 2012. So over several decades, an average monkey outperforms the market index by almost 2%. So, and also monkeys outperformed not all, but some of the analysts which were providing forecasts, who were supposed to be smart people, knowing how to calculate all the market movements, how to, who had models of companies and so on. And still monkeys who was just picking randomly companies, they outperformed those experts too. So those of course are exaggerated examples. There could be other examples which worked in other direction, but still this is like a lesson for all investors that do not overestimate other expert knowledge. So, and how to choose investment course if you are going to? First of all, you should be aware that almost every big broker provides a free investment course of free investment training, maybe not on a deep level, but still, why not to take one? And you should remember that why would they do that? So of course, the goal of free investment course is to get a client. And if this course is provided by some organization which, for example, have very narrow specialization, like for example, structured products with metals, or I don't know, or forex, of course, they will probably be subjective, and they will probably be advising you not objectively. They will be advising something which related to their products. So be careful and do not choose such companies. Also remember that probably no one can teach you about investment in 1 week. So of course, something can be taught in 1 week. For example, here is brokerage account. That's how you can buy corporate bonds, right? But if you want like to make some serious strategies, if you want to follow all the market news research and understand all this, and to make your actively manage your portfolio, then you will probably need more time. And if somehow, I don't know, if you're interested to become on professional level, I guess for people it takes like several years. So, and I do not consider myself as a professional investor, absolutely not. But some people who do it professionally, of course, they come to it during many years. And also, that's actually an advice which works for every educational course. Look into the teachers and look into the course plan, and you will probably may understand something from their resume. And also probably common advice for different education course ideally is to go to some well-known entity with a good reputation and with a high spectrum of products, so they would not tell you that you only need to invest in their products because they just have different options. So how to make it all technically? First of all, there are two investment styles. I already mentioned them, and they are more or less clear from their name. It's active investing and passive investing. And active investing is when you want to earn more than a market or some market index, and that's what Warren Buffett was telling about. If you want to earn more than the market, then you should do something about it, and at least try. And this market level you compare yourself with, called the benchmark, and the aim of active investing is to outperform the market. And usually, because at least it implies some smart strategies and portfolio management, active investment usually assumes human portfolio managers and analysts. So why it's important those are humans? Because for passive it would be electronic or robots. So, and also of course those operations, they usually bring higher expenses. First of all, it's commission and training. If you use services of asset management, you will be paid commission of your asset manager, and so on. And this, of course, also can affect your final return. And the passive investment in turn, you don't care about beating the market, you just care about the fall in the market. Or you may be, for example, just buying some conservative instruments like bonds, and just to, just to wait when your income will come to you. Or in case of if you're following the market, it may be not coming to you, but at least you are you earn what the market earns. So, and as it's passive, it does not require much of the human involvement, and it may be automated, or there may be robots trading and so on. And of course, since you do not do nothing, because every time you do operation, you usually charge some commission, and here you will probably have lower expenses than with active investing. And both active and passive investment, it can be done either by yourself, or you can also go to the investment and asset management company. There are quite a lot of them, and I believe all banks providing such services, because every commercial bank has a department responsible for asset management. So it's quite an easy task. Maybe it's not an easy task, but it's an easy task to find the list of companies which do things like asset management. And a little bit more on those investment companies. So if you decide to continue with investment companies, then you will just give your money to this company and they will do all the portfolio management for you. And sometimes, of course, they have to communicate with you, and at least for this particular type of investment companies, which are not some mutual funds, not some hedge funds, just investment companies whose purpose is, to help you. And they would be calling you and asking you if you're okay with this, if you're okay if I buy that. But in general, they will be take all the management process by themselves. And that's why you need to choose carefully, obviously, right? If you're giving your money to someone who will be managing them and choosing strategies mostly, you need to choose very carefully. You need to understand what strategies they have, what are the commissions, what is the cost of managing, and so on. And also, of course, check if they have some history and what people say about them. Usually investment companies, they have fixed fee for the fact that they are your managers, or they may take some percent of their asset under management, or sometimes they may just take a percent from the profit they earn. For example, if they earn profits for you, they will take 10% of it for themselves. And if they earn nothing, they also will get nothing. So in some ways, it's quite fair. If they earn nothing, that what's the purpose of the existing? So they will not take a charge. So, but usually it's a combination. For example, they take a very low percent for the fact that they are managing your portfolio, and they take much higher percent from profits they earned from your money. Also, there are, as I mentioned, investment companies may be those who are in active contact with you, and they adjust their strategies for you. And there are also companies like mutual funds, which already have strategies, and they may use passive investment as well. For example, there are funds which invest in market indices. We will talk about it later as well. So, broker. If you decide to do it on your own, then you definitely will need a brokerage account. And you, because the broker is the one who provides you access to the market, so you will need brokerage account. Again, where to find a broker? Most banks have a department which provides a broker service. So, for example, Sberbank, VTB, as we already discussed, Tinkoff, probably Citibank. I know all well-known commercial banks, both Russian and international. Pretty sure all of them have brokerage. So, in this case, you are the one who chooses everything, and you just tell or just type, or just by pressing a button, you tell what you decided to your broker, and the broker makes this operation for you. And of course, broker is charging the commission for every operation it makes for you. So what's brokerage account? Brokerage account is the place where you can put your money and to buy and sell financial securities. That's why you need brokerage account, right? And you may even have several brokerage accounts with the same broker. For example, one account you may use for bonds and stocks, and another account for more complex instruments. Of course, more complex instruments are not like for beginners, but if at some point in life you may come to it, and remember this slide, for example. So thankfully, today, everything is usually on electronic platforms, so you don't need to call somewhere, or you don't need to go somewhere. You may just access your brokerage account in your smartphone and just press the button and to buy something. So, and you will not see all the processes which happen behind this button. Also, you in your brokerage account, you have access to your portfolio and your portfolio history. You may see your performance. You may see how much you earned today, how much you earned or lost over some period. You may see the market prices and so on. And also, which is quite convenient, you know that in Russia, not in Russia, in every country, you are obliged to pay taxes, and at least in Russia, I'm sure in other countries must be like this as well. Brokers usually already deduct taxes for you, so you don't have to worry that you need to pay taxes on your investment income, because broker usually do this for you every year. And also, broker will provide a regular everyday reports for what's going on with your portfolio. Here is an option which I could not carefully translate to English because it's completely a Russian feature. In Russia, we have a brokerage account with tax benefits. It's called Индивидуальный инвестиционный счет, or IIS in Russian. But here we will call it brokerage account with tax benefits. So what it's like? Here are special type of brokerage account, which main pro is to have a tax benefit. First of all, you can only have one such account, and you only can invest in rubles here. So no forex, no foreign markets, only Russian markets, only in rubles. You can place there up to 1 million ruble every year. so added. So not it's not like a upper limit of the total amount of money, but every year up to 1 million ruble can be added on your on this type of account. And the main feature is that you can get a tax refund from either what you earned from this money or from the initial investment amount. For example, if you invested 1 million, you may get 13% of this back. But also there are some limits, like if the size of amount of money is big enough, it will be too big and the tax deduction will be lower. So if you're interested, you might check it in more details because there are a lot of details. So and but another feature is, which is not quite comfortable to everyone. So to get this tax refund, you need to keep the account open for 3 years. And usually you cannot just withdraw money, you can only close your account. So you know, keeping your money somewhere you cannot access them without losing all those tax benefits, it's not always convenient for everyone. But on the other hand, if you're interested in long-term investment, you may be considering this type of brokerage account. I think it would be a good option for you. Yeah, and as I said, this account can be only ruble, so you can only buy securities on Russian market. And as for mechanics of transaction, you may ask, for example, okay, I am buying securities via my brokerage account. So what? Who knows about it? Except how can I prove that I bought something? Am I really an owner of some share of company I just bought? Here is such thing. It's called usually when you trade a security is like share, bond, or whatever. Apart from brokerage account, you need also so-called depository account. There is an organization called the depository, and they keep all the depository account to, you know, to keep the information about who owes which security. So depository account is where your securities are stored electronically, and here you can check on every asset who owns this asset. And thankfully, most brokers do this for us, and we do not need to care, you know, how to open this depository account because it's already done. Usually, when we open our brokerage account. So and when you make a transaction, you trade. You make a trade, you buy some shares, or you sell some shares. This depository changes what's written in the records, and now not you as the owner, for example, are the guy who bought it from you. So this were like introduction part of the investing part. That's it for now. We will continue on the same topic next time and next Wednesday as well. Please, if you have any questions, please let's discuss.
I have a question about the assignment. When will it be uploaded?
I'll upload it right now after the class. You mean today's assignment, right?
Yes, about savings for the retirement.
Yeah, I'll just create it I'll create it right after the class in Canvas.
Okay.
Any other questions? Here I can see something in the chat. Do you know a way to open a brokerage account with an American bank in dollars? I think to do so, you need to have a representative of this bank in Russia, probably. At least I don't see how you can do this. Maybe there are some ways, you just need to Google. I think why not? If the American bank is present in Russia, you definitely can do this. Also, there are things like just not the banks, they're just brokers. For example, let me show you. I tried to to open my account in this website of Interactive Brokers. Interactive Brokers is an international, probably the biggest broker in the world, and for me, their main feature was that it's in English. For some reason, in Russia, we don't have much in English. For example, you can use this, and this you definitely can do it distantly, remotely. But for me, it's for some reason they require some documentation, and it did not work out. But as a possible way to do so, you can use something like this. Could you please post recording links to on Telegram and efficient roles so I can access them? Okay, I will actually. I already uploaded first 2 lectures on YouTube. I just didn't have time to share the link. So, but I will. So, any other questions? Okay, then thank you very much. I'll see you next week. If you have any questions, please write me in Telegram.
Thank you.
Thank you, guys.
Thank you.
Thank you.
Mm.